Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Friday, January 30th, 2026. It's 4:15 p.m. Eastern Time, so markets are now closed for the week and for the month. So we can, I didn't even think about it. We could take a look at monthly candles. I didn't have that pre kind of mapped out in my head. I don't have a notepad in front of me. Sometimes I do when I'm doing these videos, hit what I want to cover. Just a few things in my head. I don't want to do a super long one. Just a quick update on the equity markets, a couple key sectors, maybe semis, tech, financials. Those are the biggest ones. Tech being the biggest, and then financials, and of course semis being a subsector. I did see some very interesting movements in one of the financial subsectors today, specialty lending. So I'm going to get to that. Business development companies. I wanted to do an update there. You're probably updated out on metals and miners, but a quick update there, of course, because it's a big move and it kind of speaks to other things that are going on in the market. So we'll look at that as well, and I'll tell you what I'm talking about there, what I'm thinking. All right, so this is QQQ. We remain smack in the middle of a big sloppy multi-month trading range right here, as we were back here. You guys know my thoughts, unless you're brand new to the site. If you are, just catch up, go back this week, whatever, and look at any of the videos where I do start out with coverage of the broad markets. But I'm still expecting a downside break is where I'm leaning. I'm open to anything. Break up to the upside, I suspect it'll fail, but I'll look at it one day at a time, one sector at a time. I'm a very, what's the right word to use? I have a lot of variables in my analysis. I am not a unidimensional trader just only trading the SPY, the S&P 500 or NASDAQ 100 or any one index. Trading at any given time, many different sectors, indexes, commodities, precious metals, crypto, whatever, long, short, not everything at one time, but I'm watching those, and then I engage sectors and stocks and indexes when there's opportunities. And so I usually start these videos out with just a broad coverage of the broad markets, because that kind of dictates where most everything goes. All right. And again, to reiterate that, or to expand on that, there are certain markets where you have just broad base, everything's moving up in tandem. But we've seen lately in this trading range tremendous disparity, especially among the market leading Mag 8 stocks. And that's what I've noticed before, that typically when they start to break down or underperform the market, the leaders have died. And yeah, glass half full says, oh, that could be healthy consolidation. And they do. If they pick up the reins, and financials can hold up relatively well, even if they correct a little bit. But if they relatively hold up, and big tech, takes back the reins, then yeah, it's going to take the market to new highs. I suspect, I'm already seeing evidence continuing to mount. It's going to go the other way. And then I do these videos in advance to kind of give you the levels that make a difference, just like in gold, silver. Last night, I rarely, you can count the number of times on one hand the last several years that I've gotten a post out after hours, anytime after 6 p.m. or on a weekend. And last one I can think of was when natural gas hit my 490 target. We milked every bit of 100+% run, whatever it was back then. That was just last year. That was a Sunday evening post. So, anywho, take note of those if there's something that I think is really important enough to have me walk downstairs into my office at 10:30 at night. That's certainly played out today. That was that imminent crash that I said was appearing in the charts. All right, we'll get to gold in a second. Again, I give you a lot of that. So this is it. QQQ, the NASDAQ 100 closed down today 1%, 1.2%, nothing huge. I parked the little trend line here. Again, you have this busy board, I call it, just a lot of annotations because we've been in a trading range. So I get kind of a little micro with my analysis, lots of little levels, and that's it. So yesterday we had that 2 days ago. When was that sell signal right here? Was that Fed Day? Yeah, Wednesday. And we've had the market leading stocks, so quite a few of them report this week. We had a trend line break there, a drop, hit support, which, told you I'd cover. Gave a little bounce up. We went back up. I forget which targets I gave you at the time, but this is where we stopped at 629.05. Really, really nice resistance. Why is it nice resistance? Well, every single advance except this little false breakout here, which, by the way, in itself is bearish. Anytime you have a failed breakout, breakout that quickly fails, especially impulsively, that's bearish because we call that a bull trap. Sucks in new longs that think the market's going to go to new highs and beyond. And then when they realize it didn't, then this is where their stop should be placed and hit. And then they have to rethink, okay, the breakout failed. So either way, and look, in a trading range, you're going to get a lot of whipping. Then the next downside, maybe this sell signal fails with a break to new highs. I don't know. I can tell you where I think. I think we're going to keep going down. But we break this level, that's 607, especially then about 600 right here, 601, and we get closer to the bottom of my trading range. Again, my prediction has been the exact same prediction I gave you back here when we were in a nearly identical trading range, that any new high would most likely fail, followed by a move down into and then ultimately down below the trading range. And that's what happened there, and that's what I think is going to happen. And if it doesn't, hopefully I'm making money in other areas. So let's move on. Look at the S&P 500, SPY, and that has clearly popped above the trading range twice. Just weak. There's just no follow through buyers. In other words, this is how I had it boxed right here. Pretty much the whole trading range here. Breakout, it failed. Tried again, failed. Minor trend line break. You guys know me. I'm hyper focused on the Mag 8 stocks. We have half of them out of the way now with earnings. Nvidia, big check mark down here. Again, this is all recap stuff. Needs to take out this trading range. We're at the top of it right now. We've had one failed attempt to break out, put us back in the range. And again, unless some other next week, the remaining things or Mag 8 that report, or any other catalyst that takes this broad market up. Remember, Nvidia is the single largest beneficiary of inflows into the indexes. 401ks, money just buying, day traders, swing traders buying, SPY, QQQ. Every dollar the S&P 500 gets, or I should say every dollar the NASDAQ 100 gets, I'll tell you exactly how much Nvidia gets because I just updated the other day. At the end of Invesco publishes on a quarterly basis the holdings. That's what I went from the end of December, so about a month old. So for every dollar that you give Nvidia, in QQQ or the NASDAQ 100, or NASDAQ 100 futures, Nvidia gets 8.75 cents of that dollar, almost, by far, the largest holding, about 10%. And then you add them all up, just the top 8 equals 44.84%. So literally just shy of half of the returns of the NASDAQ 100 are accounted for by just these top 8 stocks, right? So that's it. It's nothing most don't know, but you have to, realize what it's going to happen when Nvidia moves up and down, or the inflows. So like I said, there's there could be a news catalyst before Nvidia reports, but they're an outlier. They report a lot later than most of the remaining Mag 8 stocks. So they're February 25th, it looks like. Alphabet, we're waiting for that next week. From a technical perspective, I've called it down. I play the game every earnings season, call a stock up, down, or I have absolutely no opinion. Flip a coin because I don't know where it's going. In this case, we broke down. We've been back testing, so that's a bearish chart. Earnings could certainly change their trajectory, but for that, I call it down. And it's the last. It's what I call best in breed lately of the Mag 8 stocks, pushing right off new all-time highs. Actually, put one in yesterday. But still, all that was is what is that? Since we broke down here, 1, 2, 3, 4, 5, 6, 7, 8 today's highs. An amazing 8 consecutive tests of that trend line, 8 trading sessions in a row over a week there, close to 2 weeks of calendar days since the breakdown. So that's it, and they're going to report next week. So let's just see where we go from there. So as I said, I'm kind of keeping things light. Apple, I've already told you, I had a bunch of check marks. We hit the 200s. We nailed the exit on the trade. We got in a little early on the entry. I always say there's a big difference. I'm either early or wrong on a trade. Or I can be, or sometimes I nail it, get in right on time. But there's a big difference between being early and wrong. Being early means you get in as long as your stop isn't hit and you go on to hit your price target. You were correct on that trade. You were early. And believe me, when I say early, we're talking a few weeks. It's not, before the stock peaked and rolled over. So it's not like, we got in 6-8 months early. And it was just a quick swing trade. I was just looking to make a quick 10% or whatever it was. And then we nailed the exit. We hit my third target there, which also came in with the 200-day moving average. They bounced, and that's it. All right, so that one I wanted to see how it would trade today. Pretty much a non-event. It's pretty much a non-event. And they dumped it into the close. Let me see. Yeah, I do have regular. So managed to stick save it almost was, it was red throughout most of the day, it looks like. Is that right? Yeah. Yeah, there's yesterday's close. So Apple spent most of the day red and managed to just barely close positive for today. So let's not try to read too much into that. To be continued next week, right? I always say they need to digest the gains for sometimes a couple days. I'm sorry, digest earnings. A little tired, guys. I haven't had lunch today. It's been a busy day. Microsoft, another one. Right here, we took that little bullish falling wedge breakout, hit my second preferred target, at which point I said close out, earnings are coming up. Had it coming down here to this trend line, hit that to the button, and we're holding that trend line. So the bounce has been very muted. Not a lot of buyers stepping in. Again, that's my primary trend line right here on Microsoft. And once that goes with that 422-ish level, remember there's a big old gap, that will give me the next check mark. We've already had several check marks on this one. That needs to be green now. Let's make that one green. Shouldn't be a question mark. It really should be a check mark. That's meaning a rejection of the 200-day moving averages. Amazon, they're going to report next week. Needed to break this trend line, then the 200s, and then the lights out level to 11.17, meaning that support level's taken out. Should be lights out for Amazon, the market, in my opinion. Meta had a big earnings beat, took back the 200s. You got to give it points for that unless the 200s fail. I suspect, again, I can tell you with a high degree of confidence, if the majority of the other magates take the market down sooner, they go down, they'll take Meta down with it. Why? Because you get outflows in the market, and then Meta takes of every dollar going out of the NASDAQ 100, or use a round number, every $100 that gets pulled out of the NASDAQ 100 via QQQ or futures, almost $4 of that is taken away from Meta, if you will. That's, it's called forced selling. The indexes, the ETFs and mutual funds, and believe it's not just the index funds, just about any growth fund in the world, especially US-based growth funds with a lot, are going to be chock full of the same top holdings. These growth fund managers, the majority of them figure out for years they don't have good stock picking skills, and your studies have showed the vast majority don't outperform the market. So it might be the Schwab growth, US growth large cap fund. It's going to mirror the NASDAQ 100. I can tell you that. You pull any growth fund, you're going to see a lot of these guys, and they're not to the same exact weighting, but they're roughly mirroring the indexes, so they don't outperform, because then they lose their job. So my point is, it's the inflows work not just on the index funds, but just about any growth mutual fund. All right, let's move a little faster. Meta, I just covered. Broadcom, still waiting. Broadcom reports March 5th. So yeah, that one we have to wait a little bit. Walk in the line like Johnny Cash right now. I'm talking about this purple uptrend line, beautiful uptrend line. Sorry, didn't mean to sound like Trump with that beautiful thing. It's just, that's what I see. So many clean reactions with one brief violation or recovery, and we've been dancing on it. And even if you turn off all the lines, take the trend line away, you have your key 200-day moving averages. So that's it. This guy needs a little nudge, but like I like to say, support is support until it's broken. So that's it. And then Tesla. Finally, Tesla gave me a check mark. Earnings are out of the way. Breakdown, back test, rejection. Now we just need to break these next support levels. Price support around, I'm being sloppy with my drawings, the recent lows about 412 and 50 or so. Then the 200-day moving averages, and then we should start to build some momentum to the downside if my outlook is correct. Okay, and big tech, which is pretty much the Mag 8 stocks, isn't everything, but it's, you know, by far the most important. Last I checked here, back at the, in the third quarter last year, at the end of the third quarter, it was about a third of the weighting in the S&P 500 and roughly half of the NASDAQ 100, right? Big tech companies, tech in general. And I'm using tech as the term, and you include some of these are in what they call the communication sector or consumer discretionary. But Amazon, most will consider a big tech stock, but it gets lumped in the consumer discretionary sector, just like Meta and Alphabet get lumped in the communication sector. But I think it'd be hard to argue they're not tech stocks, right? All right, so that's a third weighting, and there's the big trading range in the tech sector. Again, you know my expectations, but for me to be right and to get that bigger move down, we are going to have to take the bottom of the trading range. So that's it. And just like last night, where I give you a level, and I told you it appeared in the very last sentence of that post, said appeared a crash in the miners, metals appears likely to be imminent. And so once we break that, I think it'll be the same thing, and then especially the 200. So that's the biggest sector. There's no way on God's green earth that the stock market's going up very far if the tech sector falls. It's math. It's not any other thing but simple mathematics by the weighting of it, right? So XLF financials have been waiting and waiting and waiting. Well, we had a check mark. Remember, we had a breakout to all-time highs. It was above that previous high. That breakout failed. That gave me a check mark, a little bear flag. That broke down, took us here, and we've been dancing on that 53-ish support. And I've been saying for a week that needs to go, and then the 200s, and then this is the lights out level. When 51 goes on XLF, the second largest sector of the S&P 500, as long as tech hasn't grabbed the baton, because that's what happened here. When tech stalled out months ago, the financials, especially recently, took the baton and started running and holding the market up and taking the S&P 500 to new highs. But that's why the NASDAQ 100 didn't go to new highs. Why? Because it doesn't have any financials. This is it's one sector. There's very minimal, if it's negligible, the amount of financials in the tech sector and NASDAQ 100. So that's that. All right. So bottom line, if tech and financials go down, the 9 other sectors in the S&P can kick and scream and try to drag it up all they want. They're going to get dragged down like a, like they have an anchor and a, chain and a, brick, strapped to their ankles. So it'll be because of the weighting of the financials. So watch that level. I'm not going to get too nitty gritty on the analysis now, but I'm seeing, waiting to see the King break down. JP Morgan, the second largest in the financial sector. We've been short forever. This is another example. Well, it's not even being early. We weren't early. We nailed it. We shorted. It was either one of these two shorted the. I believe it was one of these two trendline breaks. We hit my first, second, third targets right away, short order. And then we went sideways. We've been in a sideways range, and we finally broke that range. We quickly hit my fourth target. We bounced. I've been covering this one lately. And it's still just a long-term trade waiting for the next sell signal. And look at this. We've been dancing on T4. I haven't modified that trend line since I created it back on June 9th, 2025. You can see it there on the pop-up. And it's just been acting as support like a world champ. That little violation, that's what we call a stick save. We close right back on it, same the next day. So we haven't had a breakdown. You want to see a solid break, big intraday break, especially just a close below will do the trick. And just like the last time we broke T3, which was right here, after dancing on it for months, we quickly went down to T4. And that'll be the same thing. Go down to T5, T6. So this is more than just a single trade idea that we're in. It is the second largest component of the S&P 500. It's going to make certain permabulls go rut-row, scratch their head. Why is Visa going down? I'm pretty sure Trump cowed down on the threat to cap interest rates at 10% on credit cards. I haven't, last I heard, I haven't followed that closely. But again, we shorted this stock and made that call long before there were any discussions about caps on interest rates or anything else. This is a play on the consumer and the economy. You won't read about it until long after it's already happened. The default rates have started to spike and all that good stuff. That's lag data. Trust me, when these guys report, they can shuffle around, play a little shell game with earnings and other things as long as they want. But ultimately, the charts are going to indicate where there's problems in a company first. So that's why I do very much listen and factor in fundamental analysis, especially on long-term trades. But charts, short-term charts are the most accurate guide. Oh, and by the way, if I didn't make mention, we're starting to finally move away from those key 200-day moving averages, which act as support. We had a little bit of a whipsaw there, recovered them quickly, stayed above them. Test, 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 test. Oops, lost the 200s. Tried to recover, but that was, will the real whipsaw please stand up? So far, that looks like it to me. So a little downside break, recovery, but now we're clearly below. And again, all we have to do, it's like that, when you're a kid and your friend's standing on the edge of the pool, right? And you go, they're not looking, you go, give them, you only have to do a little nudge. You can take your pinky finger and slightly push them, and then they lose their balance and they go forward. They have to jump in the pool because their balance is no. That's what we need here. Just that little nudge, boom, right there, and we take it down, and it should go on. And because of this trading range, that's energy building like a coiled spring, right? That's how I view these trading ranges. So a downside break, it's a good chance it can punch us right down through T5 with very little, if any, reaction, take me to my 6 target. And then some of these trades, if evidence continues to mount, I'll add longer term targets. So I just toggled out to a weekly chart. Remember we shorted it here on that break. It's been moving down, but what's happened since? Well, this trend line, I could probably, I have a purple trend line. This is the primary bull market uptrend line. Let's see how far that rolls back. Goes back to 2009 right here. Roll that. Breakdown, back test. So I don't talk about this every day, but very much long-term charts and technical developments go into my analysis. This is a break of a secular bull market uptrend line. So therefore, I may very well add additional targets there. These are just, when I gave them to you before, they were just bull market pullback swing targets, right? Not shooting for the moon or stars, looking for a 20% drop in Visa. But based on that long-term weekly trend line being broken, and now we're below it, and if this level goes, I'll tell you where the next stop will be on Visa on the weekly chart. There'll be a little hiccup right here. I'll put a little level in there. A minor support there, but probably come down here, 290. That brings Visa down another 10%. Then down here. That's my current long-term swing target, 21% drop from current levels, which is also about 31 from the recent divergent high. All right, let's move a little faster. Oh, shucks. I did that thing where I paused the video, and I've been talking for I don't know how long. I can see I was 23 minutes into it. Hate the software, and I've looked for alternatives. The screen recording software. I always pause between charts to collect my thoughts, get onto the next chart. And I have no idea where sometimes when I'll go click the resume button, it just doesn't flash or give you any indication. Actually, there's a slight bar around the screen, but I'm taking a snapshot of a very small part of a very large monitor with a lot of charts when I do this. All right, I'm going to go back here to just financials. Hopefully that's it. I'll watch the video before I put it out to you guys. If I missed more, I'll either re-record it over the weekend or just kind of give you a few charts underneath it. My point was the financials failed breakout, backtest failed, the new high dropped here. I'm watching for a break of 53.10, then the 200-day moving averages, and then what I call my lights out level, $51, and then I think that will take it down because the financials are the second largest component of the S&P 500. And then within there, again, if I already covered this, my apologies, want to see the king of the sector, 800-pound gorilla, JP Morgan needs to break this level, which is intersecting price support about 292 in the key 200-day moving averages. And that should really get the party started on the downside for the financials. And then the second largest, right behind JP Morgan right now, is Visa. Visa is a trade that we've had a short on for a while. I went through, again, I don't know if I already recorded this. There's a difference between early and late. or early and wrong. Wrong on a trade is if you go long or short a position, your stop is hit before your price target, your profit target. Early is getting in as long as your stop's not hit. If you go on to play out and hit your targets, it may take a little longer than expected. And I wouldn't even, this one's really not early. In fact, on the contrary, we immediately hit, I can't remember where we shorted, but we hit 1, 2, 3, all three of my initial 3 price targets. Then we went in a trading range for a while. Then we broke down here. It was already covered recently. We quickly, once that trading range was taken out, we hit T4. We bounced back to the top of the trading range. And as I often say, when you see trading ranges, especially well-defined ones like this, especially ones that go on for many months, I equate this from experience. This is like energy building in a coiled spring. And when that spring breaks, that's why you had a quick swoon down, an immediate big punch down to T4 when that trading range was first broken. Again, we snapped into it. And you can, if you want, box it this way. You can say that the new trading range recently has been right here, right? We went back to the top of my trading range and then back down. And if I thought this was a support level back then when I first added it back on June 9th, 2025, so that shows you when we shorted it, June 9th, right here. Oh yeah, we nailed the highs there. We would have shorted that breakdown or back test, put the targets there. The fact that we've been dancing on it ever since with no violations. This is an intraday. That's the candlestick shadow there, only to close back on it. It's an intraday break. You want to see a solid daily break and or especially a close below. And as I like to say, the redder the better. And because of this, the point is, again, my apologies if I already repeated this. It's such a long trading range. I suspect we may go down and blast right on through T5 with little, if any, reaction there. So either way, it's still the next target. There's a big old gap right there. Traders are going to recognize that gap. So they'll probably hiccup at least at minimum and maybe bounce. And if they do and they bounce off there, again, it depends on what's going on at the time. So I just want to point this out more so not to update this trade, but to let you know that is the second largest component by market cap in the financial sector. And it also is on top of it just being a trade idea or heavy weighting in the financials and the S&P 500 because of that, it is a tell on the U.S. consumer. Last I checked, Trump had cowed down on the capping credit card debt at 10% credit card interest. I don't know where we're at on that. I really don't. Maybe it's back on the table. I don't know. But that doesn't matter because when we shorted this stock and I was calling it down here to here, here, and here, there was not even the slightest whisper hint of talks of capping credit card debt. So remember, we do things here on technical analysis, and the fundamentals will follow. And to me, it's more about a tell on the consumer. You're going to only read about consumer delinquency spiking when Visa's down here and they report maybe the next quarter. It looks like they just reported. So maybe 1-2 quarters later, after the stock is down, we hit my 6th target. We're down over 20% off the highs. Then they're going to come out and tell you, oh yeah, we've been seeing an uptick in delinquencies. All right, so let's move on. Oh yeah, the next sector, and this is what I was covering. All right, so this one was on my radar today. I have a watch list of various subsectors within financials. I will keep a very close eye on it. And this sector just took it on the chin today. Dropped down, took out. This is specialty finance. I'm going to get to the companies in a second. We had a divergent high, just like we did back here, and now here. And then a breakdown today, stopped cold right on the 200-day simple moving average. And I have price support on the key components. You can see the components right here, Rocket, UWMC, PFSI, and the likes. These are the specialty finance company. And right before the video, I was checking for news and I didn't see any. I thought for sure I'd see a headline, maybe a big earnings miss on one of them. But remember, they all don't report on the same day. So this is something going on there. And, sometimes a really bad report on one company can take down related companies. But it was technically induced. remember, we shorted this stock back here and played it like a grand piano. We shorted right off that. We had a divergent high and a bearish engulfing candle. We hit my first, second, third, fourth, fifth, and final target. So we made about a 46% or so profit on that short trade. Covered that, lows, never even came close to any stop, and came full circle. And it's the same thing, wash, rinse, repeat. Now this trend line, just like this one's been broken after the divergent high, but we parked right on this secondary trend line right here. And the 200-day moving average, which is the exponential in red, we parked right above that after splitting the crosshairs between the exponential and simple 200 days. And price support, we hammered right off. And that 1713 level, you can see on my pop-up box, I haven't touched that line. I put it back on September 22nd, and I modified it somehow on September 24th. I haven't touched it since then. And you can see that's exactly where the stock hammered off of today. So, but point is, that's a pretty powerful breakout. Something's going on there, and I'll probably read next week, see what the catalyst was for these big drops. There's another one we shorted back then too. I must have shorted those bearish engulfing candles. We hit my first, second, third, and fourth and final target. That's swing trading, capture the bulk of a trend, get out, 50% drop. And this stock is, it's kind of showing you what's going on. The UWM engages in residential mortgage lending. So the takeaway, and so does Rocket, guys. Rocket does the same. Rocket is a fintech company providing mortgage lending, title, and settlement services. So the takeaway here is, and I've said this often, the U.S. stock market and hence the economy, the U.S. economy has been beyond resilient, beyond what most, even the most optimistic economists would have thought a couple of years ago, especially in light of tariffs and all that, because it's been a very circular trade, just like the AI circular trade with the big tech companies, Alphabet and Amazon and Meta, plowing money into NVIDIA. NVIDIA turns around, invests in OpenAI and other smaller, chip companies, and that it's a circular, positive feedback loop. Well, same thing with the U.S. economy, but I've always said there's two things. Other, of course, the job market's a big one, but what the consumer, what causes them to spend and stay bullish and positive and discretionary income and going out to dinner and buying new cars and stuff, are stock portfolios. And so when the market right off all-time highs, we know what that's done to consumer confidence and spending, and their house. Those are the two biggest assets of the haves in this world. I hate to say it that way. We all know there's a bifurcated a market. The middle classes, we're seeing a bigger and bigger disparity between the wealthy, the haves and have not. And so wealthy, we know, are keeping this, most of the economy going right now. And most of their assets, as I said, are in the stock market and the housing market. So housing market is, we know, just kind of all wonky. Either way, there's something here. We'll find out what it is. But technically speaking, these guys broke down. Now, I wouldn't short them here with your money because they just hit really nice support. Rocket's down in just a couple weeks here, down 30% to really nice support. If anything, you buy it here. You buy the 200s pullbacks. But if those go, which I think ultimately they will, bounce or no bounce, Rocket's going back down to where my previous targets were, and then probably lower. UWMC, PFSI, we did the same thing. Those were the three we shorted. Short off the divergent high, bearish engulfing candles, hit my first, second, and then I had the third right there was that trend line. And I had two other targets, but I covered, back then on the April 7th lows, I clearly stated cover all shorts, go to hard long, full long position. But look, we're back to that level now. I mean, this stock just today, I guess this was the one that probably took the others down. Whew, look at that. At the lows today was down almost 40%, closed the day down 33%, a third of the value cut in half. That's again, they're all three together. I trade these guys together. They engage in the mortgage banking and investment management services activities in the U.S. Oof, not good. All right. What else? Semis. Somebody asked me about semis yesterday. And semis are very, very much an important subsector of tech. And my reply was, here, let's see if I can grab that chart. Okay, this is it. Posted it just yesterday. All my charts are always time and date stamped. Yesterday morning, there it is. SOX sell signal pending a solid break and or close below this minor uptrend line with the arrow breaks denoting price targets and likely reaction points. Target 1, 2, 3, and that's also going to come in. That third target, about 272, will come in with the 200-day exponential moving average. Semis have gotten too far away. It's just gravity, if you will, or stretching a rubber band. You get any stock sector index gets too far away from its 200s, it's going to come back and at least visit them. Quite often when they get too far, it'll overshoot to the downside. But so that was yesterday, and what is today? That's pretty clear sell signal. I don't have to squint to see it. We closed at the bottom of that red candle there. That is a sell signal all day long and then some. So there's your targets. Again, you can reference that chart. It would have been, I believe I posted under one of the comment sections yesterday. And it was time stamped in the morning, so go back to earlier post yesterday, or maybe, I probably applied to a post from the day before, actually, if I post a screenshot of that at 9 a.m. Okay, I've already given you enough on the metals and miners. I'm just going to tell you just straight up, we had the week is over. This is gold. This is what our weekly candle looks like, GLD. Not a bearish engulfing, but we have a massive bearish engulfing in silver. Look at this sucker right here. Bearish engulfing, the body of a candle needs to engulf the body of the previous or multiple previous candles. In this case, we engulfed the 2 previous weeks. That is pretty dang bearish. I will say this, we're close enough in proximity to that trend line. Maybe next week we get a stick save. I told you my thoughts. I took some home for the weekend, small position, because this is Crashville. You're probably seeing a lot of I've traded these parabolic uptrends before. You have the high, and everyone thinks for all the reasons that silver is only going to keep going up, that it's super bullish. They can't even fathom what happened there, and it's number one, it's a knife through the hearts of those bulls. They're going to, unfortunately, not have a good weekend. Those that were overweighted. And look, if you're properly diversified, and you've been in silver for a while, it's really no big deal because you're profitable, still very profitable, depending on where you've been in it. And if you don't have, half your portfolio in silver, but if you're the type that doesn't, he'd always talk about, having silver and 20 other positions in various gold mining stocks, and gold is the farthest thing in the world from being diversified because they have a super high positive correlation. They all move together. So I just want to point that bearish engulfing candle. Let me see what it looks like on the monthly. No, it's a big reversal candle. It's not pretty. All right, so I don't want to go over that too much more because I give you a lot of commentary throughout the day. This is GDX, Gold Mining Sector ETF, which happened to close on trend line, but with a massive bearish engulfing. So I think next week you'll get that first rally. Somebody asked, and I made mention here, if you remember the video I did earlier in the day, I'm just going to pull it up on, go to my metals, and this is important, metals miners, the long-term gold, was it, not the ratio on my 30-year gold, silver right here it was, okay, this one. Okay, if you recall today's earlier video, I put up these that show you when a parabolic advance bursts like it did today, the initial drops range from 29, I'm doing it here, 25, 28, and 40, there it is. So the highest being 40%, the lowest being 25, and I can just take a note. If that's 30 and that's 30, that's 40, that's 25. So your average is right around 30. Well, that's about what we dropped today. Yeah, from the highs to the lows in silver, right? Silver went down from the top, yesterday's high, to the bottom today, I'm measuring, was 37%. So that's about where I expect that first, and it's going to be. There's comments. Go in the comment section today. Somebody asked. I said you don't want to ride it out short, because even if it's just a 50% or so retracement, it's going to be a 27% pop in silver. So do that, and then I'll look to reshort. What right now, I'll do more next week, but to test to the top of that candle, today's candle, to test the bottom of the gap. The bottom of the gap would certainly be one potential area to short. And again, I encourage you to just check out the comment section, or quite a few. I spent the day busy doing as much as I could, replying to questions, comments, adding additional charts and things. Last but not least, I'm going to go to BIZD. This one, talk about nailing a trade. Long before anybody was being marched out, at least I, follow my news feeds. Nobody was talking about the business development companies. Most people didn't even know what they were. Everyone knew about had heard of private equity, but then private credit. I started putting my radar right here. Told you a break at this level would signal problems in the sector and trigger an objective short entry. I went on to add 4 price targets for you. We hit my 4th and final target to the button. Turned around, didn't just cover that short, reversed it there, and I gave you 3 targets. When we hit the second one, I removed the third, saying, you know what, because we hit T2 so quick, just like the, Netflix, or what was the trade we did the other day where I said, we shared Microsoft. We hit to the 200-day moving averages. That's it. We got a quick bounce. It's not worth staying long for that extra 2%. So I closed that trade out there officially, removed that target, and even if we went up there and it was still resistance, that didn't change anything. But we sidestepped the big give back that took us all the way down. It would have stopped out any reasonable long anyway. So it was a excellent, great example of, milking every penny of a drop there, turn around milking all the initial move up. And then when it got here, and then I'll point out again, that's resistance, and a break of this trend line would trigger a sell signal, objective short entry. And we went down, and now look, we've taken out, not by a lot, but I wanted to point this out because I've had this uptrend line here. Today we closed a little bit below there. So watch this sector. Remember Jamie Dimon and cockroaches? Again, that was long after I started putting on my radar. I was doing nearly daily updates here. But I've said it before and I'll say it again. The credit markets, most experienced traders, professionals know the credit markets are everything. When the credit markets blow up, the stock market blows up. The credit markets are the grease that keeps the wheels of the stock market turning. And yeah, this is the shadow area. If there's going to be a problem, something, this is one of several areas there may be problems. And again, you have to ask yourself, with the stock market, the S&P, and the financials right off all-time highs, what are the BDCs doing down here, threatening to break a new multi-year low if they take this out and take that level out? Something's rotten in the state of Denmark here, right? So just watch that level and really watch this low right here. Again, that was my 4th and final target before we got there. That's when the media and everyone was freaking out about them. But then we're like, all right, we already been there, done that. We got ahead of that trade. That time everyone starts getting bearish and worried about it, and Jamie Dimon's talking about cockroaches, we're covering the short and we're going long for the. By the time you read about something in the news, it's usually priced in. And so you will learn that. Try trading on headlines, you're going to be just spinning your wheels. Technicals will get you in front of the headlines. The headlines will follow. By the time it's out, buy the rumor, sell the news kind of thing. Okay, so watch it. We're not there yet, but it is concerning, and I've been watching that, especially with the fact that we're seeing financials rocking and rolling. And then yes, I will end it here. I promise. I told you there's just so many things in my head. Watching the regional banks. And one other sector I'm watching very closely, the broker-dealers, capital markets. Let me find capital markets. Capital markets right here. Big one, because when the stock market buckles, the stock markets have become a casino to the likes of which haven't seen. Look, I live in a vacuum. I don't follow a lot of really many other sources. I'll occasionally turn the TV on. I do read, headlines and news articles and all that. But we've moved to such a casino. I mean, it started with Bitcoin, and then the fact that, I get it, some geeky computer program developer came up with Bitcoin, and it was a little fun thing for those, that small niche group till it became mainstream. And then, but Wall Street 100% legitimized it by, allowing, to trade as a registered security, the proliferation of the recent release of the spot ETFs. And of course, we have a president who wants his own crypto and wants these pro crypto and all that. And again, crypto is, as the late great Charlie Munger said, it's the currency of kidnappers and smugglers, and it's nothing. It's backed by nothing. And so that was really the first true signs. Every bubble is different. .com was just used anything with the name .com, but the crypto bubble, we've had meme stocks. The bubbles keep popping up and growing larger. Obviously, hot air has come out of the crypto market. I've given you a lot of analysis on that lately, but now you're seeing these all these betting platforms. You can bet on anything now. All these, it's kind of unregulated. They're talking about stepping and regulating, but everything's become a casino. One day, single day options, all that kind of crap. Just pure speculating whether the stock market or a stock is going to close up or down for the day. The stock market's no longer about investing. It's just about, there's the trend chasers that just chase trends. And then you have just a tremendous amount of speculators. And so when these guys are the beneficiaries. And my favorite still is Robinhood. I just want to point this out. I've been telling you this. One of my favorites to short because of the type of clientele it attracts. It just took out the 200s here. Robinhood, let me show it to you on a weekly chart. This is what it looks like on a weekly. Put in a divergent high. It's been moving down. It just took out the 200s, but by a small margin. And this is my BOD support, about 97.40. When that breaks, you'll have, and it's, I've been sharing as a short trade idea for a while, another 30% downside to my next target. And there's others in there, don't get me wrong. I'm not going to go over them all now. I did see a couple that are concerning today in that sector. Let's see, we have, I'm just clicking on a few that were down big. Wolf, this one broke down back test. That's WUF, Terra Wolf. There's quite a few in that sector. So look at that one breaking down. And those are the second, third tier names in crypto. We know what they're doing. That was a trade idea recently. I'm going to stop here, guys. It's a long video, and I apologize for the snafu earlier. Hopefully I didn't miss too much or rewind too far back and start and talk for 5 minutes over something I already covered. But I got to wrap the video up here, get something to eat. It's late. This has been Randy Finney with Right Side of the Chart. Have a good weekend.